Hey, what is going on, everybody? My name is Lamont. I've been a full-time trader for 7 years now, part of the TheChartGuys team for more than half of that, where I head up our futures room and our swing report. In this video, we'll go over the overall market, cover some of the tickers within some of the hype sectors, and also hit you with some trade zones. So, without further ado, let us get into it. All right. So first things first, starting off with SPY here. So well, let's see. We have a conservative zone. No, not that. Oh, it's from here, I guess. No. There it is. Yeah. So came into our conservative trade zone, which was drawn, a long time ago. It was probably here. Typically, I drop the box, the left side of the long box, where I think the idea starts to make sense. Really, anytime after this breakout, this zone made a lot of sense. So came back down, tested this key structure, and remember, there are only two demand zones left in the way, right? Before this all-time high or the prior all-time high test from 2021 that is all the way down at a 479.98. So I can kill this for now. And so the idea then is if the buyers were going to be confident, right, the most confident bigger picture, you don't want to find acceptance back under 479.98. So the reason why we have this trade zone set up as such is that it's the point of control of this structure and the POC of this structure. And so you can see where the high volume areas are. Just figuring if we're going to see some healthier consolidation, bigger picture, you probably don't want to come back down here. If you're not going to come back down here, where should they probably get caught up? Should probably be around here. So if you are, have used this trade zone, then, ideally you've already taken off partial profits into this back test of supply because the buyers, after these sellers were able to crack through this structure and this structure, only holding this guy, the goal for the buyers now, of course, then is to get back over this guy, get back over this guy. So that's why the targeting for this was just the point of control backtest here, because if these sellers are going to press the issue after a response from the buyers from here, the first place where they should have problems is here. So ideally, you've chopped it up now. You can throw your stop under here. No later than here should your stop be. And even if you stop out here, you still have to be open to these bigger picture buys as long as you don't find acceptance under 479.98, right? So it's, there's always going to be conflicting information, but you have to decide which trade makes more sense to you, means more to you, right? Which one is going to serve you better for your personal goals. Like there were day trades to be had here, and on the sell side, you were probably killing it, right? As a day trader, if you are a seller, right? But also at the same time, if you're a bigger picture operator looking for this potential monthly high or low, I would not fault you at all if you are looking for bounce plays throughout all of this, because if that monthly high or low does print and you are keeping your risk low on these attempts, well then if this monthly high or low is set and it can lead to higher highs, obviously then that'll more than make up for the attempts that were in here, again, based on how you operated there, right? So anyway, that is pretty much it. So now we have a daily higher low and higher high. Key higher low support is at 497.49. So now what we should be focused on now, right, is do we find acceptance over 507.81? Do we find acceptance back over 512.76 is really the key, because this is where the sellers just broke down from, right? So we are interested, of course, in these back tests, but really technically what we care about on this daily chart is this block of supply here. I haven't updated it to this area because I'm fairly confident that if we were to draw this up, it's probably going to give us very similar levels to what we already have up here. So our original references, I think, would be okay. But, if you feel like updating it, it's fine. It's going to tell you, I can almost guarantee you it's going to tell you a very similar story. I guess we take from here, right? So this VA high is pretty much the same as POC. This POC is pretty much the same as the value area low. And then this value area low is pretty much where all this volume is. So we're watching it anyway. So I just haven't updated it, but technically it would be fine to do so. Anyway, so we are technically not, I mean, there is a decent amount of space for a weekly lower high, but it's not that much. 524.61, anything under that's going to be good for a lower high. Now, we do have to be mindful still that, remember, the golden pocket retracement is pretty much right on this daily no change level, so there's confluence there. And so if we do happen to see a rejection from 512.76, that would not only affirm this supply, but it would also kind of suggest that fib traders are in the mix. So if we get a really clean golden pocket, like wake up and then rejection, that's going to let us know there's a lot of fib traders who are interested. And fib traders probably don't dominate the market. So if that is the case, I think that would be pretty telling. Essentially, it would mean that it's not just fib traders, but a lot of confluence there. Not just fib traders, not just this supply, but probably other operators as well. So anyway, that is pretty much what we're looking at now. From a pure classical like candlestick pattern or whatever, you might call this a bullish harami on the weekly time frame. You know, it does have some pretty good, you know, data, right? Haramis in the past, bullish haramis in the past have confirmed, but you know, I don't really put much weight in that kind of a deal. All the candle is telling you is what happened, right? The predictive element of it is, I think it's overdone. Anyway, so that is that's pretty much it for SPY. All right, and um yeah, so this last week, you know, I was primarily focused on playing the bounces. I'll go over a little bit here in this public video, but I'll probably save a bulk of it for the private video because there's a lot to go over, honestly. But just want to show you guys, you know, how you can go about, you know, employing all of the stuff, right? Just to show you how we get it done in the room. So on April 20, you can see this on April 22nd here, right? That is here. April 22nd. Maybe we won't go over all of them because there's a lot. But at April 22nd, so remember what I was saying last week was, I don't remember actually if it was in this video or not, but last week I was telling our private subscribers for the swing report, if you're interested, the link is in the description below, that I'm kind of pumping the brakes right now on individual stocks, and I just kind of want to see what the overall market will do, because it's a lot easier to play the you know, individual stocks if the overall market is doing okay, right? It's what do they say, rising tide? Rising tides raise ships, all ships, or whatever. So that's the idea, right? I wanted to see what the overall market would do, and if you remember last week what we were talking about, bigger picture, we were looking at some really key stuff, particularly the QQQ, right? Particularly the QQQ having failed to backtest this prior high here, coming so close and failing, and knowing that this is a, you know, a proxy essentially for the 2021 high. You know, that's why essentially we were looking to for bounce plays, right? I was interested in looking for bounce plays. It's also the first daily oversold, right, in quite some time. So since all the way, it wasn't even oversold back here in the wow. So the last time it was oversold technically was back in 2022. So for a lot of reasons then, but the thing is, you don't know, right? We couldn't have known what was going to happen there. That was a very notable miss, but the sellers could have easily just kept pressing the issue and drilling lower. So because that was the case, I didn't really want to get too cute with individual stocks. Rather, I would say, okay, well, we have a pretty decent chance of the overall market bouncing. Let me just try to play with the overall market, the indices, for that potential bounce. And then if the indices can find their footing and find acceptance of this 2021 high, it's really back to business, right, for these individual stock picks. So you'll kind of see that, I think, in a little bit with NVDA. But again, we never know, right? We take it moment by moment. So anyway, let me just show you. So I know then that on Monday, we are looking for some potential bounce, right? And so at this point in time, it's pretty early in the morning at 9:40. I make that play at the 22nd. So at 9:40, that's like over here, somewhere in here, right? 9:40 is somewhere in here. So we're just looking at bottom fish off of these lows here, buying a pass back over it, and then looking for the overnight high for a chop it up, stop the rest. And then later in that day, in that session at 11:51, I buy the pass back over again. 11:51 should be here, 51-ish. So it should be, oh, I guess a bit of a late message, but should be in this hot mess or whatever. And that one is the one that I think ends up sticking, I believe. Yes, look for more at the open and then stop under the low. So the open was over here, and so we chop it up at the open, right? And then just, you know, hold on to your runners or whatever. And I just want to highlight just a few of these trades. There's a lot. I don't want to, you know, there's a lot, but I just want to show you how active we are in our chat room. This is, you know, October 22nd. And then on October 23rd at 9:30, so that's like just a minute after the open, we make the play for the ad. So that's the next day, right? That's on QQQ. That's on this day, right? The 23rd. 23rd, right? At 9:31, we buy that move right back over the open. So that's on this candle. We buy that move, stop under here, chop it up. I guess I just didn't really talk about it much. I don't want to spend too much time on it, but that entry was obviously good for the entire day. So again, in the chat room, we're posting our live trades all the time. If you are interested in, learning, following along or whatever, then check out our community. Link is in the description below. I don't want to bother you too much or bog you with too much of this, to be honest. But yeah, but I do want to show you that like the clarity that it allows, right? So I don't mean to flex, right? I promise you that this kind of a methodology is worthwhile, right? So don't get me wrong, there were attempts that were stopped out as well, but to be honest, like I really crushed this week. So just want to show you how we put it all together. So on the next day, on the 24th, I was saying, all right, well, I'm interested. So that's this day now on the 24th. And so I'm still interested in seeing this daily bounce despite the fact that we are red from the open. So what I did was on the ES here, I see that, okay, we've come back and we are testing this prior high, 50350. So we know that if we hold this structure, they should be trying to come here. The first objective, right, to negate this breakdown has to be to get back over this guy and hold over it. So at this, on this day, on April 24th, in the middle of the session then, that was here at, April 24th at 12:56. I'm saying, hey, listen, I'm interested in bottom fishing off of this ES. 12:56 is over here, right? So here's 56, and then so I just send out that alert. So I just bought the pass back over the Depop. That's development point of control. That's right here. So 56, and again, this move is good for a while. We chop it up over here. We stop out the rest. No harm, no foul, because, well, there was like negative earnings or whatever. Either way, the idea was we're still playing. Why are we still doing that? Why are we going for buys even though there's a potential daily lower high being set? Is because if the daily bounce is going to keep going, they should try to hold over here. So it's a reasonable trade, even though it doesn't stick. No problem. We just stop it out. And then the next day, stop out the rest because we did get some profit taking. And then, so here's a profit taking. Right, so I let you know, hey, I bought it, stop is under the low, chop at the Y val, and then the rest is, I think, with a stop out. But either way, that's how we use these daily levels, right? What are we doing here, right? Every single week, we're laying out the framework, right? The bigger picture framework for these trades, which are fine, right? Like I said, if you use the conservative trade zone or whatever that we set up from way back when, then obviously you're fine. I've lost it now. I've lost it. Maybe did I delete it? I think I must have deleted it. Oh no, it's probably in here. Yeah, right. So if you use this, you're fine too, right? But what we do is we try to refine our entries, right? And so let's see, that was the 24th, and then on the 25th, right at 9:35, I'm saying, hey, listen, I'm interested in the rut here, and the reason why is because the rut was backtesting this value area low, and I'll put all this into context, bigger picture too, but I'm interested in the rut as well because if the market rally does happen to broaden, then the smaller caps, they should, this is turning to a long video, then the smaller caps should also see some rally, right? And they are still holding over this guy. And so the idea then is as long as they're holding over this guy, they should be trying to trade over here. If they can trade over here, that opens up all of this. So I'm looking for a potential, laggard move because the ES and the NQ, they're all really strong. And, again, if the market rally is going to broaden out, the small cap should see some love. So I was interested in looking for these plays over here. And so that's at 9:35. And it was not successful. This one was at, let's see. Yeah, so that's here. I try to make for this buy soon off the open. We stopped it out at 9:39, and then at 10:18, I redo it. And 10:18 is over here-ish, right? So it should have been in these three candles, right? I buy this move back over the Depop, and I say I'm using this guy for stops. I could have swore I had that, but here, I'll just copy it over. I'll show you with this. Right, so I say I'm using this guy as a stop. Right, so that's this low over here. That's this low here. See that low? It's the same low over here. So you'll notice the low never gets violated, right? So it's exactly why I use it as a stop because it's the lows. It's the first lower low that cracks that like kind of didn't see follow through, right? Like this is the lower low and it didn't really see that much follow through. You reject your lower low and you pop back over it. So it's also roughly this high, So obviously then the demand at the low of the day is the key. If as long as you don't trade through or into this area of demand, then the buy from over here still makes sense. And that one I'm still holding on to because obviously we've just rallied from there. So and then so that was Thursday, and then finally on Friday, oh, I don't have anything for Friday because for Friday I was just live streaming it. So on Friday though, if you're a Chart Guys member in our Slack community, then you already know I just bought the ES, right? So I bought the ES off the open because it was an incomplete gap fill, right? So we just bought that new high, chopped it up there, chopped it up somewhere in here, and then at the end of the day, I just rolled it out. I just, I rolled out the mini into a couple of micros to book the profits in the minis, and then just hold on to the micros to see if we can get some more bounce going. So that is literally every single day of the last week where we more or less got the direction right because of the bigger picture levels that we share with you every single week that's marked up. So you can see how then you can day trade around these levels using the same exact concepts, just like on different time frames. Excuse me. Anyway, so yeah, if you're interested in following along, learning how to do this methodology, give us a shot. Very supportive community, love helping each other. And so that is pretty much it. Don't get like there's more to it, and certainly there are some challenges on the way. Like I made a mistake definitely on this day, which was a profitable trade, but it distracted me from a bigger trade. But I'm gonna save that for that breakdown for the our swing report subscribers. And again, if you're interested in learning with us, then give us a shot. Links in the description below. But let's get this rest of this video done, eh? So I do apologize. It's probably gonna be a long one. All right, so we'll be super fast with the rest. All right, so for QQQ then, for QQQ, so it's also got this kind of bullish Harami look. And remember that the key for the QQQ was that we failed this to touch down on this prior high 412.92. So because they failed to do this so far, as long as that failure is in place, this is a very notable failure because it just means that we're not gonna, if they're not gonna trade through this high, then they're not going to come to the value area high in the point of control of this structure, and this structure best represents the 2021 high. So bigger picture right now, these buyers are very comfortable, but at the same time, we could very easily just reject from, this is a lot of supply. This is a ton of supply, So we could very easily just reject from this high, even though we have a daily higher low and higher high here, because there's so much supply here, we could very easily just bump up here, reject from here, and then it's right back to looking at this guy, right? So I would not be too surprised if we were to see some more balance like under that supply and over this guy, right? So it's really all about this supply and this demand in the short term. Okay, so but as of right now, bigger picture, just looking at like a potential very healthy monthly higher low. And I kind of like these for continuation more so than like ones over here because, well, it's a new breakout, right? Like when you break to a new high, the odds of that monthly higher low being set like this one and this one are much better. Even this one, technically, even this one, right? So yeah, those monthly higher low plays, I like them a lot better, when you're in blue sky breakout. So that's pretty much it. Daily higher low and higher high, but we're looking up at 435.11. These buyers need acceptance back over 435.11, or they do not negate the change from this recent breakdown. All right, the most recent breakdown. Okay, so that's pretty much it. Moving on to the Dow. So did it miss? I think it missed. 376.14 and 376. Okay, so barely kissed the trade zone, but whatever. I wouldn't. Obviously, if you're not being prepared for that, if you are being prepared for that, you're day trader of sorts. Then it's just like that RTY play that we just spoke about, right? We know that this level is being tested, so we can just zoom in and look for our tactical setup, our low time frame tactical setup by zooming in. What just happened here? Right, so on this, oh, I see. So on this day, hang on a second here. Right, so when you see that, okay, we're coming into this area, this is that key level that needs to hold, that these buyers are going to be confident in this demand zone being the demand zone. When you see these breaks with no follow through, you can buy that move back over it. And even if you stop out on this attempt with no chops, fine. You do it again, you stop out, fine. This is like no risk at all. This is seriously like no risk. This is like no risk at all, right? And this is like no risk at all. This is only 0.1%. And then the return on this to get to the next area is, 1%. So that's like a 9 or 10 hour trade, right? So anyway, yeah, that's the idea, right? If you wanted to use these trade zones and fine tune the entries, you're looking for these kinds of day trade setups around the levels, very similar to all those setups that we just spoke about regarding the ES, the NQ, and the RGY. I got a little bit of everything, didn't I, last week? Anyway, so it's very similar, right? Where what we primarily care about is the 2021 high that's all the way. Oh, it's actually 2022 high. Excuse me. Right, the Dow is actually a little bit different. So we're looking at this 2022 high here. Oops. Oops. I could have swore we already had this up, but I guess no. Okay, so as long as we're holding over the 2022 high, 369.50, these buyers are, very comfortable, just looking for monthly higher lows as well. And so the best case scenario from here, right, would be to hold this guy because this guy is sitting on top of the 2022 high. That's why this conservative trade zone is as such. So if you've made plays off of it, then ideally you're chopping it up at the test of these lows, and the Dow is actually the only one that actually got back up to this daily no change level. So here's that local breakdown, right? And so far, it's still two rejections from this daily no change level, even though we have a higher low set here, a little bit of a laggard in that they didn't break to a higher high like SPY and QQQ did. IWM and the Dow still just looking for up at daily lower high resistance. So a bit of a red flag, but not a massive one. Excuse me. So anyway, that's pretty much it as well. It's all about this guy and this guy now. Bigger picture. And on the weekly time frame for the Dow, there's a much more space for potential lower high to be set under 398.82. But looking for a sell here it's a little bit aggressive just because it's a blue sky breakout. That being said, names that are already weak or in bigger picture balance, you can go pick on those names if you're really interested in looking for sells, which to be completely frank, I have been looking for sells, just not super aggressively, right? I'm not looking to like sell the strongest names out there. I'm looking to pick on names that are bigger picture balancing or already showing you a lot of relative weakness just to get your feet wet, right? And again, you don't even do anything, right? Like I haven't really been too active in the individual stocks because, it was more fairly easy, straightforward since the October low. And now things are looking a little shakier. It doesn't mean you have to flip right away and get on the sell. You can doing nothing is also an option, right? So anyway, that's kind of where we're at right now. And that's pretty much it for the Dow. Nice little poem, eh? So for IWM, like I was saying earlier, right, it's really all about this guy and this guy, right? Why? Because this guy is what made all of these lows here and these highs over here, right? This fella. And then this guy over here made these major lows here and here, and then also, of course, these major lows, and then all of these highs. Look at these highs here, right? And of course, we're watching this middle guy, the no man's land structure, rejection, 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 right? And then now we're seeing a huge battle for this essentially no man's land, right? So it's essentially sellers, and here's the trenches for the sellers, and here are the trenches for the buyers, and now we're there in no man's land trying to rush across, right? And hopefully not getting mowed down by suppressive fire. So anyway, trade zone worked out to a T, right? This was our conservative trade zone that was shared, like I think all the way back up here, right? I don't even remember honestly, right? So why was that our trade zone? It was because why was this our trade zone, right? Why was this sell zone? Why was this trade zone shared as such, right? Because well, it was based off of this, right? A break over this guy potentially not seeing follow through. Why did we set up this? It was just set up this, right? So it's very straightforward, right? When you trade with this approach, it's very straightforward. You're not like you're not depending on like some kind of signal that fires that you don't even understand what the indicator is telling you, right? Like whatever those BS, right? Buy, sell, those BS indicators or whatever. That's funny. They're pretty much BS indicators, right? You know, that's not what we do, or that's not what I do. At least that's not how I look to get it done, right? All of my trade ideas are based off of change or acceptance over key areas, right? This is probably the most important concept when it comes to technical sequencing. Is you just kind of want to look at the market from the perspective of change and acceptance, right? Where there is change is the cheapest place to find out whether or not a trade idea is going to work. Whether or not there's acceptance over a level gives you really good indication as to who's in control. Acceptance over the regular trading hours high lets you know day plus buyers are definitely in control, right? Acceptance under the point of control lets us know, okay, the sellers are positioned well to move value lower, but they have to get under the under the value area low in order to move value lower, right? So you just call things exactly for what they are with this methodology. It's all horizontal, levels, right? So we can all agree on them, right? There's no trend lines that on a different angle would be completely different, right? You see what I'm saying? So patterns that are very subjective, right? If the neckline breaks of the on the head and shoulders, is the pattern invalidated, right? To think that a pattern is either validated or invalidated by like one point or whatever is kind of absurd if you think about it, right? Because there's going to be more stuff that happens after it. So, there's no true confirmation of anything, right? You're always actually evaluating acceptance, right? Nothing is ever confirmed. What you're actually trying to assess is whether or not something is being accepted in each moment. So again, it's like if we're using the analogy from war, and here are the trenches, right? Okay, well they're occupying a space, right? So that doesn't confirm that they'll be there forever, right? Because if the other side pushes them back out, okay, they no longer are there. They have lost their acceptance in that space, right? They're no longer being accepted in that space. So instead of thinking about things from a confirmation perspective, like, okay, this is a bull flag. As soon as it breaks, that bull flag's confirmed. It must rip, and so that's my trade plan. I don't need to stop because I know what's going to happen. It's confirmed. That's going to cause a lot of pain. That's going to cause a lot of frustration. You know what I'm saying? So anyway, I hope that's helpful. I hope that's clear. So if you did use this trade zone, again, you should have exited here at the target. Why was this the target? Because this is the first place that they should fail. Why is this the second target? That's the next place that they should fail if they're going to fail. We don't know that they're going to fail. But if they are going to fail on the way back up here, it would be very reasonable for it to be at the point of control, which we've already seen a battle for countless times, right? Countless times we have seen a significant reaction off of this POC. So why wouldn't we use it as a target? So anyway, that's pretty much where we're at right now. Daily higher low has been set at 193.77. Got to break over 199.32 to confirm a daily uptrend from here, and that's really it. On the weekly time frame, there's a lot of space for a lower high, similar to the Dow. Anything under 211.88 is going to be good for that. And that's really it. So it's really just all about this no man's land still, this guy and this guy. Okay, and the dates are always here, by the way, in case you want to reproduce this on your own chart. All right. So that's really it. Honestly, you can keep recycling these two zones because essentially it's just looking for responsive trade off of this guy and this guy, right? And again, you don't have to scale in, right? Like I said, I didn't get a play off of here until here, right? So just use these levels to structure your own plays. And if you have no idea how to do that, join our community. I promise you, we'll point you in the right direction at the bare minimum, at the very, very least, right? We'll get you going in the right direction. So anyway, that's pretty much it for IWM. So for the dollar here, so the dollar, this is all very healthy consolidation right now on the weekly time frame, just looking for a higher low. Asset buyers do not want to see the dollar rip over 106.335. Essentially, this supply has pretty much dictated all of these highs ever since 2022. So to rip over that would put some pressure on asset buyers. That's like, stocks, gold, whatever. All of that would probably take a hit if the dollar starts breaking out into a new, like, 52 weeks, over 52-week high. So eyes on that. The sellers right now create no change without getting back under 104.840. And I have this yellow dash line over here, 105.310, because on the hourly time frame, that's just this little structure over here. And so it's very notable that these sellers so far just couldn't even find acceptance under this guy, right? Because their real goal on the daily time frame is to get back under here. So if they can't even get through this guy sitting on top of it, well, then obviously they're not getting back down here. So eyes on 105.310. As long as there's no acceptance under 105.310, these buyers should be trying to come here, 105.920 and 106.335. So eyes on that. Did not come into our trade zone, but I don't know how many of you guys are trading dollar anyway, right? So the VIX, this is notable, right? So the VIX spiked back over this 1544 level, and now it's pulling back quite a ways. Now, obviously, we never know, right, what it's going to do in the future. But if it continues to find acceptance back under 15.44, then I think the odds of us, the buyers just picking up where they left off are probably pretty decent. So we shall see. Yeah, we shall see. All right, so let's get into some of these hype sector names, starting off with NVDA. And so for NVDA, pretty much picture perfect, right? We've had this trade zone laid out ever since here. Shakes out for you once over here where it comes into it, chop it up, stop it out, and then again, it works out for you here. Your average fill is here, plenty of opportunity to chop it up. Came just shy of hitting our target, but you've already had plenty of opportunity to chop this up, right? If you have a fill here, fill here, fill here, your average is here, you get all of them on this one day. And again, you don't have to do that, right? Like you can look for that play on this session, for example, right? Like if you just zoom in and you know the 791.91 is our key level, you can make plays off of that, no acceptance under it, move back over it, you buy that move back over it, throw your stop under the low, chop it up at the DVA first, at the VA first, chop it up at this prior low next, and then, see what the market will give you for the rest. You never have to use these trade zones blindly, right? I'm just trying to give you the bigger picture framework. I almost never will use this trade zone blindly. This is where the trade becomes interesting, and then I will almost always look to refine my entry because I would prefer a more asymmetrical entry, right? This is a 2R trade with 5% risk, whereas doing that play that we are just talking about regarding no acceptance back under this point of control, right? Even if you have a pretty bad entry, your first chop is only 0.7 R. Maybe you don't do it there. Maybe you just wait for this prior low. That's 1.5 R. And then to get back to this daily no change level is 2.6 R on 1.7% risk, right? So you can see how different these kinds of setups are, compared to these bigger picture ones. Again, I only see you guys once a week. Unless you're part of our community, then I see you all the time. But if you're not part of our community, then I only see you once a week. So that's why these are bigger picture trade zones based on these daily charts, right? So if you're a more active operator, it should be all the info that you need to structure your own trades. And if you're struggling with that and you do have a system and you're trying to figure out how to put it all together, just shoot me an email. I don't care if you're a subscriber or not. I don't care. Shoot me an email, ask me a question, let me know exactly what is going on with you. And then I'll do my best to contextualize all this information within your scope, right? Within whatever. And then hopefully you can get more value out of these videos. So anyway, that's pretty much it for NVDA, right? At this point now, it's all about this key supply. Like, although this is a very notable bounce, right? It's a bullish harami. They didn't even get back down to this big guy over here. They didn't even get back down to this guy. They didn't even get back down to this, right? So here's still a gap remains unfilled. It's hard to knock this, like for all we know, this stays healthy into earnings again. Now we do have to be mindful, like the reason why these earnings were, huge blowout earnings was because in the prior year, right, they're looking at a year over year. And so, when you were comparing it to 2023, right, this is, what was happening, right, wasn't really much of anything. So I think that starts to change, right, if I'm looking at this correctly, at least. We just have to be mindful, right, that these earnings results may not be as as impressive going forward. So anyway, that is pretty much it. I'm also watching this little hourly structure over here. I don't have the date range set up here, but it's this guy over here from the April 9th, right? Because this guy's pretty much sitting at the lows of all of this. And so as long as these buyers are holding over this guy, I think the NVDA buyers are doing fine. So very notable. And SMH is, also it looks again like pretty healthy, right? Weekly lower high, lower low, no follow through into a pretty big snapback response back under this prior low. But they need acceptance over this over what I have marked up here, I would say, at this hourly structure here, because you can see how this is kind of a no man's land. So in the next week, if you do happen to reject from here SMH, that'd be a bit of a red flag for the overall market, because you do want the semis to lead. So next week, ideally for SMH, you see a move back over to 18.03 and start holding over it. That'll allow buyers a little bit of relief. Okay, so this is Saturday morning right now, pretty early morning. So I just have a wonky schedule this week, so I don't know. Obviously things can change for Bitcoin and Ethereum. Obviously they're still trading over the weekend, but it's to give you the bigger picture rundown or a look at it. I'm not sure why this is time frame. Oh, hang on here. This should be white. And then the screen just turned really orange. Must be a thing that happens at 6 or something. Let's see, current interval only. Okay, so for Bitcoin, bigger picture, nothing really has changed, right? We're still looking to hold backtest of this guy. And as long as we're holding over backtest of this guy, higher prices relative to the prior all-time high are being accepted. So that's really all that I care about, although there is one thing, right? So basically, we're looking at this, all right, a battle between 69,000 and this point of control, 61003.36. If we, come out back to the right, you'll see, okay, no acceptance over 69K, which is the prior all-time high, then, okay, let's try to crack back under the structure, right? Doesn't that make sense? Right? That's exactly what the market's trying to get done, right? They're either trying to decide, are we going to break to new highs? If we're going to break to new highs, we got to find acceptance over 69K. Or are we going to come back down into this range? If we're going to do that, we need acceptance under 61003.36, right? So that's obviously what's going on right now, right? Clearly a battle for these two levels. And so what I find to be, notable is now if you are looking at this as a developing value area and point of control, this is a bit of a red flag, right? So that when price is balancing, what you should see is no acceptance over the diva, no acceptance over the deval, no acceptance over the diva, no acceptance over the deval, no acceptance over the diva, no acceptance under the deval. So this is problematic that you're getting caught up here at the developing point of control, and now you're right back at the deval. If you start finding acceptance under the deval after rejecting from the depoc, that would be notable, because this acceptance under the deval here, right, the deval being this blue histogram line, this acceptance over here was after coming all the way from the other side of value. So that's different, right? Whereas here, now, if we start to grind under the deval, that's after rejecting from the depoc. So the sellers are doing what they have to get done right now, edging out in this balance as long as they're holding under the depoc. And then if they start holding under the deval, what does that mean? That means value is moving lower relative to this structure. So that would be a very notable shift. What the best case scenario for these buyers now is to see a break of 61003.36 or even a break under this low that doesn't see follow through, crack back over this depoc, and then get to the diva again to let us know, okay, we're just balancing again, right? Or we're still just balancing. And if that doesn't happen, that's a big red flag. Okay, so that's pretty much it for Bitcoins. Not much else to change. Actually, I should set an alert for this for once per bar. So I'm interested in looking for plays again, right? Because if we don't find acceptance under this guy again, I like it less after this depoc resistance, but I still want to know if we get a test here. So I'm just gonna leave that up. So we got space for a daily higher low. Anything over 59573.32 is going to be good for one, and lower high resistance is just at 67272.73. That was hard to say. So that's pretty much it. For Ethereum, it's showing you some relative weakness. Let me check the ETH BTC chart. It is just got a daily trend change, so, and it is back testing this prior high here. So, maybe Ethereum sees a little bit of relative strength, especially if the dominance chart rejects from this low, the Bitcoin dominance chart. If they're going to reject from this low, right, and if ETH BTC is going to confirm a daily uptrend and see some more balance and stay in this balance, then there's the potential the alts get a little bit of go here, right? So we shall see. But for the ETHUSD chart itself, we are looking at this, right? So it's really no change as well, right? We're looking at the battle between this guy, right, and this guy. So this guy is really the key, right? Because you've made these major lows here, for these highs here, and they're just trying to hold over it, right? Because if you're holding over this guy, then you expect price action like this, right? And so that's why we're watching this fella here. And you'll notice then that this low doesn't get through to the value area high. So so far the sellers have failed to backtest this structure. As long as they fail to backtest this structure, that is constructive relative to this structure. And if they're constructive relative to this structure, they try to come here, they try to come here. So if you higher high and find acceptance over 3202.80, then eyes on 3486.37, 3598.66. And if you lower low, then eyes on this guy here, 2799.87, 2570.27. Kind of interested in plays off of this guy as well, so maybe I'll set an alert on that. And we'll see. All right. Bigger picture, just looking for a monthly higher low, right? And if you don't come back into here, bigger picture, these buyers are fine. Weekly time frame as well, just looking for a higher low. And if you don't get back under here, buyers are okay, right? So even the Bitcoin chart, you look at it, and it's the same deal, right? They didn't even come back to this prior high yet, right? So as of right now, consolidation still pretty healthy. Can it change? Absolutely. Can it change a lot? In the day that this recording, the differential between this recording and the publication of the video could, but I'm not sure. So hopefully not. So that's pretty much it. Space for a daily higher low to be set. Anything over 2865.71 is going to be good for one. And that's it. So moving on to CCJ here. So for CCJ, we have earnings on the way, and so I'm not really doing anything with CCJ ever since I closed out those calls. But what I am looking for is ideally we'll get a move back under 44.47 that doesn't see follow through. I'll set a mark for that as well. Because if we don't see follow through back under here, then obviously this change has not been negated. So we can look for plays not seeing acceptance under 44.47, buying the move back over it, being on the right side of the V, as Lance Bergstein, I forget his name, would say. And it's just that better expected value, right? When you're on the right side of the V or the A, I guess, if you're selling. So anyway, we'll just wait to see what earnings does, right? And then what happens over here. It's a big old expanding range right now, and so it's really all about this supply sitting at all-time high, right? And then this huge guy, right? Because as long as they're holding over this huge guy, well, then that's really constructive, right? Bigger picture. So as of yet, at least recently, they failed to touch down on that point of control, very notable. And then you trade it all the way to the value area high of this key supply. So, you look at these two structures and they're beefing right now. Who is winning this fight right now in this moment? Right now, the buyers have scored 4 point of control tests, right? Whereas the sellers failed theirs. So this is all good information, right, for us to assess. Obviously, that can change. If we drill under this point of control, okay, things change, right? Like I was saying before, it's not a matter of confirming, right? There's no confirming. There's no confirming anywhere, right? Like you can get a confirmation for, I don't know, like a nice concert, on some private island, right? Run by Ja Rule, and there's an Akon or whatever, right? And there's a guarantee that you're gonna have a nice tent and good food and performers will come and you probably won't have to perform sexual acts for bottles of water, and yet people who went to the Fire concert did not get that guarantee, right? Like so Fire Festival or whatever, if you don't know what I'm talking about, then right, there's no promises, right? Contracts got breached all the time, right? You just never know. There's no guarantees. Nothing is ever guaranteed. So anyway, yeah, we'll see. We shall see. I'm gonna let earnings pass and then look for plays off of this guy. Essentially, that's pretty much it. So on the weekly time frame, you're just looking for this higher low to be set. Got to break over 50.79 to confirm this weekly higher low being set. And if that does confirm through earnings, okay, we might have to chase it a bit. So if anything, we'll look for a play like this, right? But I'm not really comfortable with doing any kind of trade zone here because I always want to see what earnings does. All right. All right, so moving on to TAN here. So TAN is grinding this really, really major point of control. We know that this is the super key POC over this guy, right? This guy made it for a major rejection over here. And then after we got over it, failed a back test at the point of control, battled for the value area high, and then was off to the races for some time. So now that we are back under this guy, which was supportive here and then problematic over here, okay, we're kind of falling wedging a little bit, right? Where we're seeing these little lower lows with no follow through. That's why we created this trade zone with a little bit of wiggle room under this point of control, because as long as they don't find acceptance under the point of control, right? It's not about just breaking under the point of control. It's about staying under the point of control. Just like in the analogy before, it's not about just capturing an area of trenches or whatever. It's about holding that area, right? That's what we care about, acceptance in that area. So that's why this was laid out as such. This one already came into our trade zone a couple of times and hit the target. And so if you're still playing in here, it's the same deal, right? This is like, look how many times they failed here, right? Or under here. So if you're positioning here, you're looking to go there. I still stand by this. This is still a very reasonable trade zone. The reason why the lows of this trade zone are on this dashed line is just because we're using this structure as a guide, and this is the lower structure of this big structure. So I'm using it as a bit of a proxy. As long as they don't get back under this high, then we're not going to the lower half of this structure. You know what I mean? So anyway, that's pretty much it. Potentially falling wedge here. The weekly time frame, same deal, right? Weekly lower high, lower low, no follow through on this break. I'm kind of interested in this, honestly. I think it would make more sense to look at like individual names that are strong within the clean energy sector. So I'll probably do that. But the ETF, this is also quite notable. So I know some folks are interested in the clean energy sector, just in case it goes bananas again, which it did back here. That is it. I wouldn't change this at all. Okay, so is this the last one finally for MSOs? Yes, this is the last one. Yes. Okay, so for MSOs, it's no real change on this either, right? It's all about this guy and this guy. So this is a bit of a red flag. It's hard to ignore this, right? This is potentially a rising wedge. Higher high, no follow through, higher high, no follow through. So, you look at it on the longer time frames. and it's probably starting to look wedgy, right? It sure is. Higher lows, but higher highs not really seeing that much follow through, and then you have this, major supply zone here. So I wouldn't change this either. It is a good look that you have a daily lower high, lower low, no follow through, and then another daily lower high, lower low, no follow through. If that's hard to see, it's here. Lower high, lower low, no follow through. Lower high, lower low, no follow through. So it's still just a battle, right? For this guy, these two, really, is what we care about. This guy and this guy. So right now, acceptance under it is kind of a red flag. The reason why our trade zone is as such is because we wanted to give it a little bit of wiggle room under this to see if they will battle for it, just like they did over here, just like they tried to do over here. So this is do or die time. Acceptance back under 8.28 would be a pretty big red flag for these MSOS buyers. And you are technically still looking for a weekly higher low. At this point, you do have a good amount of space, a decent amount of space, for a potential lower high to be set under 10.96. Okay, I wouldn't change this either. At this one that came into our trade zone here, got to our target. If you're working a position here, I still think it's reasonable to stop out under here if you see acceptance under 8.28. And then if you just don't see follow through on that, that's fine. This trades right back on the table, right? If you stop this out here, whatever, and then you see a big snapback response back over this guy, it's right back to looking for plays off of 828 and this structure. A more patient buyer, you can wait for acceptance back over 9.37 and then look for a back test play like that. That's what I would do at least. All right. So that is it. This is a heck of a doozy. If you made it that long, I really appreciate you hanging around. I hope it's, you found it valuable as well. And so if you'd like to learn more or, get live trade ideas sent to your inbox, swing ideas from myself, Dan, Funko, Lori, then it's usually me and Dan. But if you're interested in that, links in the description below. If you just like these videos and you don't want anything else, no worries. I appreciate you checking us out. Thanks for sharing some of your time and energy with us. If you wouldn't mind hitting me with a like and subscribe, though, if you got something from this, we would appreciate that very much. Follow me on Twitter if you don't mind. Links in the description below. And that's it. That's the whole pitch. So thanks a lot. Appreciate you guys. And I'll see y'all soon. Farewell.